Hey, hello, everybody. Once again, this is Tony Alvarez with Keller Williams Hoover, and here's with me my good friend Andy Gagliano from Gagliano Mortgage. Hey, Andy, how you doing today?
Hey, Tony, I'm doing well. How about yourself?
Can't complain. I had
Good.
a great weekend and a great week coming ahead, so let's take the bull by the horns.
Yes, indeed. I love it. Love that attitude.
Andy, I have a couple questions. There is a lot of fuss and a lot of noise going on with the interest rates.
Yeah.
That they're super down, that is the lowest we have seen, what, in like a year or so.
Yeah.
So, and there is a lot of speculations as well. But I was reading today, the numbers, these numbers are national numbers. Okay, it's the
Okay.
Mortgage Bankers Association.
Yeah.
We got these numbers from them, and they are saying that the week ending on August the 2nd, so a week ago, more or less, mortgage applications increased 6.9%. And the refinancing applications increased 15.9%. So then again, this is on the national level. Andy,
Yeah.
you as a local mortgage broker, local lender here in Alabama, specifically in Birmingham, Alabama, uh, have you seen any difference on the applications, increase, decrease, or what's going on?
Yeah. So the short answer is yes. And we could just end the show right there, but who wants to just hear that and, then we sign off. That's no fun. But the thing is, there's a couple of different things to look at here. And, what I generally tell people when they ask that question is, I'm a microcosm. I'm a very small part of the mortgage industry and the real estate industry, but it's not all that often that my trends don't follow those national trends. And so what we're seeing is, yes, a good pickup in both purchase applications and refinances. Our applications are up about 50% over what they were last month. But again, you don't, when you're on a small scale, if you close 8 loans in 1 month, you just have to take 12 applications the next month and you're up 50%. So it's not like it's some astronomical number that, we went from doing 1 million loans to 1.5 million loans in a month.
Yeah,
So
and the ratio is not 1 to 1, like you say. You probably
no,
will take in 1 month 20 applications. Out of those 20 applications, only just to throw a number, only 8 are good applications that we're going to be closing.
right. Yeah. And that is a very real thing because as unemployment has gone up, as people's credit card balances have increased, as grocery costs have increased, medicine prescription bills, goodness, utilities, we can run the gamut of all the things that have increased over the past few years. But as those things have increased for people, it's been harder for a lot of people to pay their normal monthly bills. And so we're seeing more applications come in with people who are still going to qualify, most of them, but they're a little more marginal as far as their qualifications go credit wise. And so that's a very, very real thing where, there's going to be some applications to come in and those people just are not going to qualify. So yeah, but we're seeing that increase in applications. And, here's the thing, the other part of that what I was going to say, and I'm not saying this to discourage anyone, because from getting out and getting pre-approved or getting ready to go look at homes to purchase, because I believe that this trend of lower rates is going to continue. But last week we gave up all of the rate gains that we saw from the week before. Almost all of the improvements, I should say, in rates that we saw the week before. So, you know, a lot of that, if someone's on social media and they saw all of the hype on social media that a lot of mortgage loan officers and a lot of real estate agents were out there promoting and pushing about rates dropping, you didn't see very many of them actually get back online last week and say, oh, hey, all
Yeah.
these rate decreases we saw last week are now gone and rates are back up to where they were the week before. But that is what happened. And so a lot of the mortgage loan officers are backpedaling a little bit. The truth of the matter is rates are still great. We're still in that downward trend with rates, and we're going to have weeks like this. When rates start to drop, they don't drop every single week straight for months on end or over a year's period of time. It just doesn't happen that way. The rates are going to, try to bring my hand in here. I can never remember where my left is my right is my left in this camera. But the rates are going to come out, and, one week they'll be here, the next week they'll be here, the next week they'll be here, the next week they'll be here. And then, they're just going to kind of, what you see is a downward trend, but there's going to be some up periods during that downward trend. And that's, in my opinion, is what last week was. So I still say it's a great time to come on in. The water is warm and it's fine. Dip your toes in, get in the real estate market, because if this lower rate trend continues, you don't want to be getting into the market the same time that the masses are getting into the market. You want to be ahead of them.
You beat me to
And
that point. Like, that's something that I wanted to say. And,
yeah,
you explained it perfectly a couple of weeks ago. Everybody, just in one day on social media, I saw more than 20 posts about rates are coming down, and now's the great time, blah, 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 blah. And then all of a sudden, I'm hearing crickets,
yeah,
big silence. And to your second point, you don't want to wait. And I think you and I, we've been stretching this for the past month, 6 months since we've been doing this together, is you don't want to wait until the rates really go all the way down, because you're going to have a competition, because now you're going to have to compete against 6, 7, 8 other buyers, and you're going to have to pay more for the property than what you're actually going to pay today. Now, if you go today with today's rates and you are able to afford the property and afford the payments, and you're not going to be in a bind financially, then you buy property today. You buy the house
right.
today, and you're going to be sitting just waiting for those interest rates to come down. Then you're going to refinance. And by the time you refinance, you're going to have enough equity on your property that in reality, it's just going to be nothing, because you're not going to have to pay a real estate commission. Actually, you're only going to have to pay, if any, some of the mortgage fees that come with refinancing, which is nothing. And if
Yeah,
that payment on the long run is going to help you reduce your financial burden, your monthly payments on everything, house, car, groceries, gas, you name it. And then by refinancing, you can decrease those payments. Then, now is the time. I
yeah.
really believe that in the next 4 or 5 months, by the end of this year, people need to take advantage of the situation of what's going on and get into a house.
Yeah, totally agree. And, if you look at it just historically over a period of decades, real estate appreciates at about 3.5%, 3.5, 4%, depending on where you are. But if you just take that low number of 3% appreciation, and, I would say an average first time home buyer property in Birmingham, Alabama is probably somewhere in that 250 to 300 range. So let's go on the high end of that. Let's say it's 300,000 is what somebody buys a home for. In a year's time, that $300,000, 3% appreciation is going to be worth 309. That's what somebody's going to pay for it a year from now. Well, if they're waiting a year in order to get a lower interest rate and the rates are 1% lower, they've just paid $9,000 more for that home when they could have purchased it today at a $9,000 lower price,
Correct.
refinanced it, paid $4,000 or $5,000 in closing costs to refinance, and come out to the better, $4,000, $5,000, $6,000 because of their appreciation. And it just it makes sense to go ahead and do it now. It really does. And like you said, if someone mentally is mentally prepared and they're financially prepared, it's time.
It is time, correctly. And that's why also we need to educate our consumers, our clients, our friends, and we need to be more specific. Birmingham and Alabama is a different animal than the rest of the country. If you are looking and reading and watching national news, right now, New York is a buyer's market.
Yeah.
The real estate is a buyer's market in New York. Los Angeles is transitioning, it's in the middle. Here in Birmingham, we still seeing a little bit more of a seller's market. We haven't got to the point to be steady or turning into the buyer's market. So that's what I believe that people need to get into the house right now. Let's get into the house, because when you get to the buyer's market, that means that we got lower interest rate.
That's right.
And you already got your property, already got your house, and you already gained that equity.
Yeah.
People need to realize certain things. It's going to be a lot of changes in the next 5 months. One of the changes is a lot of people don't know is about the NAR settlement, what's going on, especially how that's affecting the buyers. You and I, we already have a little bit of that conversation. But it's time for you that if you're really serious, people, that you want to buy a house, you want to get into a house this year, start talking to a mortgage professional. Start talking to somebody like Andy Gagliano. Where you are financially, are you able to afford a house? Because these changes are going to be affecting you. And a couple of future chapters and a couple of future videos, we're going to be talking again about what's going on with the NAR settlement and how that is affecting the buyers. So you guys will have more knowledge and more understanding of what's going on.
Yeah.
Andy,
yeah.
If people wants to, or you have anything else to add to what I said?
Yeah, what I would say is I think that's a great topic for us to touch on again in another few weeks. But what I would say is any buyers out there who are nervous about that, thinking, well, I as a buyer have to come up with my own commission to pay Tony to represent me, call Tony and have a conversation, because you may be surprised at what the real world is with that situation. But that's the only thing I'll say, because you and I are going to talk about it a little bit more. But it just goes to say, don't delay. Call Tony, have that conversation one-on-one with him first. So anyway, yes, if someone wants to get pre-approved for a mortgage, I can be reached at 205-979-4412. I'm at extension 1. So if somebody wants to have that conversation with you about commissions, Tony, how do they get you?
Well, you just have to call me at 205-370-3248, and I'll be more than happy to explain to you and guide you of all the changes that are coming and how Andy and I working together can help you and put you in the house. So don't think twice. Andy, again, it's a pleasure talking to you this week, and I hope to see you next week again.
Always good to talk to you as well, Tony. Thank you. Have a great week. Bye,
You
everybody.
too. Bye.